So why do we look at the economic calendar? Because it gives us high probability trading events. Here you can see the UK CPI print out this week. Now, it came in slightly below market's expectations. It wasn't an obvious tradable opportunity. However, we covered this risk event live and we saw in the live risk event that the services metric was below market's minimum expectations. That's a key focus for the Bank of England. We've been repeating it many times, and we quickly realized actually with the weaker headline and this below expectations with the CPI and taking all the data as a whole, that is good enough for a pound short. The lower inflation data should give the Bank of England more confidence to potentially cut interest rates. So that's why it's negative for the pound. And we looked to pair it against something that was a little bit neutral at the time, which was the euro. So we went for a euro pound upside, and that was flagged live during the risk event. It was also flagged up on the cheat sheet, sent around sort of 7:30, 8:30 time, and you can see price sort of bundled around here, sort of 7:30, 8:30, and for anyone in from the cheat sheet, there was plenty of opportunity and time to get into that during the actual risk event. You can see here that price was, took some time before it started to move, and we had our first target, which was the R1 pivot point for that day. Let's just go back a few pivot points, and you can see we had our first pivot point. Sorry, was this region up here, this R2 pivot point. It's just there, and then we were looking for a potential move up to that R3 pivot point. Didn't get there, so it's just closed at the end of the day. However, that's why we look at the calendar, because we're looking for high probability trading events. They do come along. When they do come along, because they're high probability, they're worth checking out. What really matters on the calendar for this week, part of the process is we need to spot in advance which are going to be the trigger calendar points to look at. And there's three main areas I'm going to look at this week. There will be other areas, but these are the three main areas for us to look at. Let me just move over that's it. Now, the first event is the Canadian CPI print on Tuesday. Now, I will expect this to potentially move the Canadian dollar. The Bank of Canada is very concerned about its citizens having to renew its mortgages at higher rates. They see that as a really dragging on the Canadian economy, and it really wants to cut interest rates. Short-term interest rate markets, if we just take a quick look at those, we'll have a quick look at them, that's helpful to see. You see short-term interest rate markets, they now see 97% chance of a Bank of Canada interest rate cut. Last week it was like 88%, and I think the week before that it was 82%. So this has been steadily increasing. Obviously, as inflation in the US has been moving lower, that's just been helping relieve central banks around the world. Look at the RBNZ, they were happy to cut interest rates and signal a sequence of interest rate cuts coming. So inflation globally is sort of being quashed. So for the Canadian CPI print, what will give us the best opportunity here would be if it comes in much higher than markets are expecting. If we see a high Canadian CPI print, we could see a sudden flush in the Canadian dollar lower. But equally, if it comes in below markets expectations, investors will breathe a huge sigh of relief and say, okay, the Bank of Canada can start cutting rates aggressively now. The RBNZ looked in an awful hurry to get rates back down to 3%. The Bank of Canada could follow suit if they feel that inflation is falling rapidly. So that's definitely one to us looking at. Now, the US flash PMI prints. Now, this is ahead of the Jackson Hole Symposium. We're expecting Jerome Powell to be pretty relieved that inflation is falling. We've seen that one sort of weaker non-farm payrolls at the start of August hasn't been reflected in the last 2 weeks of jobless data. So with the flash PMIs out on Thursday, as well as the US jobless data, I'm expecting that to potentially move markets. And if we see employment still firm enough, and if we see PMIs positive, then we could see some more upside in the S&P 500. Could be a great trade in the E-mini. Finally, the last event to be aware of is the Jackson Hole Symposium. I'm expecting Jerome Powell to say plenty of very encouraging things about the recent fall in inflation. And how fast and how quickly will the Fed want to cut rates? That's really the question. So just watch out in the Jackson Hole Symposium. We could see some comments from Powell that indicates more or a more aggressive approach to cutting rates, and that could give the S&P 500 a nice boost higher in anticipation of falling rates. So that's what we're looking for this week. Don't forget the cheat sheet will be updated and sent out before each trading day, and as well as the webinars, we'll be discussing other opportunities as well as looking at the futures market and seeing where these sort of value areas and trap buyers and sellers are for the E-mini. Okay, take care and speak soon.